Welcome to Wealth Kingdom, where you can learn basics of financial markets.
Disclaimer: this video is for educational purpose only and should not be used to make any investment decisions, as I am not a SEBI registered investment advisor. Please do not make any investment decision without having proper understanding of the financial products. In this video, I will explain about some of the other investment avenues available, especially for the retail investors. Most popular form of investment for the retail investors is mutual funds. Let me explain about mutual fund now. First, let us look into the salient features of mutual fund. Money is collected by the mutual fund from large number of investors. The money is collected by the mutual fund through a trust. The money collected by each mutual fund is managed by a professional fund manager. The mutual fund invests the money collected in equity shares, bonds, money market instruments, and other securities, including mutual funds, depending upon their investment objective. Profits earned from the investments are either paid back to the investors as dividend or reinvested based on the choice of the investors. Now, let us see the suitability of mutual funds. Mutual fund investments are mainly suitable for small retail investors who save few thousands per month. Next, mutual fund investments are suitable for investors who do not have much knowledge about financial products. Equity mutual funds are suitable for investors with the objective of capital growth and investors who are ready to take high risk. For capital protection and steady income, debt mutual funds are best suited. Investments can be made in hybrid mutual funds by the investors who are looking for moderate risk and moderate return. I will explain in detail about different types of mutual funds based on their investment objective in a different series of videos. Next comes the advantages of mutual funds. The most important advantage of mutual fund investment is liquidity. That is, the amount invested in mutual fund can be easily redeemed or withdrawn and converted into cash within few days. Next advantage is diversification. That is, investing in multiple shares or in multiple asset classes such as equities, bonds, and so on. If the retail investors invest directly, they won't be able to diversify effectively. But if they invest through mutual funds, they will be able to get the benefits of diversification to the full extent. Next benefit for retail investors investing in mutual funds is that their investment is managed by professional fund managers. They will be able to rebalance the investments made by the mutual funds and will try to maximize the returns. Next advantage of mutual funds is that the investments can be made in small amounts. The initial investment may be 1000 or 5000 rupees, but the additional investments can be made as low as 100 rupees. Next advantage is transaction cost efficiency. As the mutual funds buy and sell the assets for large amount, the transaction cost will be less. This will reduce the cost of investment for the retail investors. Even though mutual fund has lot of advantages, it has some disadvantages also. Few disadvantages of mutual fund are as follows. The first disadvantage is costs involved in managing the funds. The salary paid to the fund manager and other employees of the mutual fund company, office rent, electricity, and other administrative expenses, cost of advertisement, and all other expenses and costs involved in managing the funds will be deducted from the profits earned, and the remaining profits will be distributed to the investors. Next disadvantage of mutual fund is lock-in period. Some mutual funds, especially tax saving mutual funds, have lock-in periods. If we invest our money in mutual funds with lock-in period, that will affect the liquidity of our investments. If we do anything in excess, that won't be good for us. Similarly, if we do excessive diversification, that will result in dilution of profits. That is, the overall rate of return on the mutual fund investments will be less. Well, that is all about mutual funds for now. Next popular investments among retail investors are fixed income securities. I shall explain about the fixed income securities now. Fixed income securities are debt instruments that offer a fixed interest income. Most common fixed income securities where retail investors invest are bank fixed deposits, post office fixed deposits, and debentures issued by joint stock companies. Fixed income securities have fixed maturity period. Interest is paid monthly, quarterly, semi-annually, or annually based on investor's choice. Principal amount invested is paid back at the time of maturity. Next comes the suitability of fixed income securities. Fixed income securities are mainly suitable for investors who prefer low risk and regular income. Fixed income securities are suitable especially to retired people who prefer to protect their capital and expect a regular monthly income out of it. Let us quickly go through the advantages of fixed income securities now. Fixed income securities will give stable returns irrespective of financial market conditions. When compared to most of the other forms of investment, fixed income securities are relatively safer. If for any reasons a company is closed, debenture holders will get their money back first. Then only payment will be made to the equity shareholders. Now we will see couple of major disadvantages of fixed income securities. First one is interest rate risk. That is, if the interest rate increased for the future investments after we had made the investment, we won't get the increased interest as the fixed income securities may have lock-in periods. Next one is credit risk. If the amount collected using fixed income securities is not properly managed by the bank or company, the investors might not get their investment back. Another investment avenue available is precious metals and stones. Gold and silver are the most common precious metals used for investment purposes. Platinum is gaining popularity in the precious metals category for investment. Diamond is the most popular in the stones category. Gold can be bought in three formats, namely physical gold, gold exchange traded fund, and gold sovereign bonds. Physical gold can be bought as gold bars or gold coins or gold ornaments. First form of digital gold is gold exchange traded funds. Gold ETFs are launched by mutual fund houses and are traded in the stock exchanges. The net asset value of gold ETFs are very close to the market price of gold. Next form of digital gold is sovereign gold bonds. These bonds are issued by Reserve Bank of India. Gold bonds are issued in the denominations of 1 gram, 5 grams, 10 grams, 50 grams, and 100 grams. In a financial year, an individual can buy maximum gold bonds worth of 4 kilograms. Sovereign gold bonds can be bought in physical certificate form if we have bank account, PAN card and Aadhaar card. To buy in electronic form, we need to have demat account also. We can buy the sovereign gold bonds from banks, post offices and stock exchanges. These bonds provide an interest of 2.5% per annum and have a maturity period of 8 years. However, we can withdraw our investment after 5 years from the date of issue. When we withdraw our investment after 5 years or at the time of maturity when 8 years are completed, our investment will be returned based on the market price of gold on the date of withdrawal or maturity. Hence, we get two benefits, namely 2.5% interest per year and the profit out of increase in gold price. Next comes the different forms of silver investment. Silver can be bought in physical form as ornaments, bars or coins. In the digital form, silver can be bought as silver ETFs which are launched by mutual fund houses. We can buy and sell silver ETFs through stock exchanges. Platinum and diamond are mostly bought as ornaments in physical form. Next comes the suitability of investments in precious metals and stones. These are mainly bought in the form of ornaments. Using the precious metals for investment purpose is gaining popularity after digital formats are introduced. Next, we can see the advantages of precious metals and stones. When bought in physical format, we can see, touch, and feel these investments. This will give us a sense of safety of our investment. Next advantage is that it is easy to get loans against these assets, which will help us during difficult financial conditions. Next advantage is high liquidity. That is, these assets can be converted into cash quickly. When the precious metals are bought in physical form, it has a couple of major disadvantages. First disadvantage is storage risk. When the precious metals are stored at our house, it is exposed to the risk of theft. We need to safeguard it carefully. Next disadvantage is storage cost. If we store the precious metals at our house, we need to buy expensive safety lockers in order to protect it from thieves. If we decide to keep it in bank safety lockers, we need to pay rent for the lockers at regular intervals. In both cases, we will incur high costs to store the precious metals. Most common investment for long term is real estate. Let us look into real estate investment details now. Real estate investments can be made in the form of land, commercial spaces, residential houses, and residential apartments. Investors with a long term investment objective can invest in the real estate avenues as buying and selling properties involve lot of time and cost. Apart from direct investments in real estate properties, real estate investments can be made indirectly by investing in shares of real estate companies and units of real estate investment trusts. Real estate investments are suitable for own residential purpose and also for commercial purpose. Real estate investments have couple of important advantages. First advantage is good appreciation in value of the investment in the long term. Next advantage is apart from the appreciation in value in the long run, these investments will fetch rental income as well. The major disadvantage of real estate direct investment is that it has very low liquidity. It will take a lot of time to convert the investments made in real estate into cash. Even if we have investments, it may not be helpful during emergencies. Thanks for watching this video. See you in the next video. Have a good day. Bye.